I'm John Hanna with CDTV.net, and we have Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. Good afternoon, Greg.
Well, good afternoon, John.
How you doing today, sir?
We're doing well.
Well, it's good.
Yes, it
How's
is.
how's summer been treating you so far?
We did just having a great summer. Beginning of the summer, I tell you, it's had a week's vacation and went deep sea fishing, and now back at work. And now we have the NBA finals coming to Oklahoma City, first time ever. Of course,
Wow.
we've had a team for about 4 years, and so Miami Heat are coming up tomorrow night, first game of the NBA finals, and it's going to be exciting. Town is just humming. Commerce is going crazy downtown. It's just amazing. So in Oklahoma City loves their Thunder, one of the top NBA franchises now, in as far as their the fans, and so it's exciting. Really
They,
is.
are you gonna go see the game?
I'm not going tomorrow night, but I'm hoping to get a ticket before the series is over to go to at least one of the games.
There you go. There you go.
It's amazing how much they're going for. I mean, the Loud City tickets, which are up high, you normally pay $20 for a regular game. Had you bought those tickets, you could sell them for $200 to $300 a piece,
Wow.
and that's Loud City. Of course, floor seats are going for over 10 grand.
Wow.
For a seat. Yeah, crazy, isn't it? So, who says the economy is hurting? I mean, all these people paying high dollar for seats. They'd rather see their team play than fund their 401k.
There you go. It's amazing. I mean, when you walk around in different places here in New York City, when I was doing here in New York City, it was like seeing a lot of the restaurants full and some of the other restaurants are empty. I guess it's probably there's no expense whenever they like something that they want to spend money with.
That's it.
Alrighty. So, Greg, what do you have for us this week?
Well, we've seen a lot of downs and ups last week in the market. I mean, you had the easing of the monetary policy in China. Domestic equities here in the U.S. had their best week of the year, more than reversing the previous week's losses. And this also renewed comfort with risk, sent the Treasury yields up. Treasury yields finished last week at 1.65 on the 10-year. The prior week was 1.47. I know we did close the year at 1.89, so we still got a ways to go to get up to what we had as far as the yields at the end of the year. But the Dow, is up 2.76%, NASDAQ 9.72, and the S&P 5.41. As we speak today on June the 11th, in around 1 o'clock Eastern time, the markets are off about 20 points on the Dow or so. So no major movement today, but really the big news was last week's headlines for Greece and Spain continue to be in the forefront. Greece prepared for next Sunday's elections, is preparing for next Sunday's elections with the focus in Europe shifting to Spain. Through a Spanish bond auction, we did see a pretty good adequate demand, but the interest rate on the 2-year bond was higher than the previous auction. So Spain's Treasury Minister said that Spain had in effect been cut off from global capital, and a weekend consultation with European finance ministers led to an agreement that Spain will request as much as 100 billion in euro dollars in loans from the European bailout fund, and they're going to try to help those countries' ailing banks. So big news over there. The markets did today on the 11th here open up higher, but they've now since pulled back. There's still a lot of uncertainty, and we'll probably get some good information on the Greek elections this coming Sunday. But also, you had China was in the news. Central bank took steps to spur these countries' slowing economy by lowering the target benchmark interest rate on loans by a quarter basis point to 6.31% and cutting rate on paid deposits. Closer to home here, the U.S. servicing sector growth increased slightly in May, We had orders at U.S. factories fell 0.4% in April, and we had increases in output and the number of hours worked, which led to a 0.9% decline in labor productivity. Then also the Federal Reserve Chairman Ben Bernanke told Congress the European situation poses significant risk to the U.S. financial system. He also warned that though the Fed continues to foresee moderate growth, the so-called fiscal cliff on the January 1 expiration of tax cuts and the start of federal spending cuts also poses significant threat to the recovery. So, what we have here is the economy still kind of barely trudging along in most areas, and also the potential for the European situation to have significant risk on the U.S. financial system. So as we look ahead to this week, John, as I mentioned just earlier, Greek elections next Sunday might clarify whether the country is likely to abandon austerity programs required by its bailout agreement, a decision that could affect the Eurozone membership. Domestically, here in the U.S., we're going to look at retail sales, manufacturing data, which could shed some light on the state of our economy. And finally, volatility could accompany Friday's quadruple witching options expiration, especially given its proximity to the weekend's Greeks elections.
The bailout that the Spanish have, what do you think of that? What's your opinion on it?
Well, there's a lot to be followed up on this bailout. This is a good start, but Germany has to sign off on it, and so there's just a lot of uncertainty still surrounding Spain and how that will all shake out. But it's a good start. It's a good sign that says, we're going to help you out and support the Spanish economy and the banks there. But there's just a lot of uncertainty still left over in that area.
Okay, and one more question before I get you off the hook here.
Okay.
So 12,000, what is it now, 600 plus? At this level, 12,005, 12,006, is this sustainable for the whole summer or even the year end, or is there some legs to this rally right now?
Well, I think it really all depends upon the mood and the what we hear come out of Europe. The Dow has pulled back. We've had a nice pullback. If you look till June, the 1st of June, the Dow got as low as right at 12,000.
Right.
And we've now had a nice bump up. We could trade sideways if there's no major negative news come out of Europe. We could even move higher, but I would vote probably more sideways to trending. Now, what could change that would be they get their ducks lined up over in Europe and they help out, and Greece doesn't leave the Eurozone, and Spain becomes muted for at least the time being. And any good news we have out of our economy or China would cause this market probably to move higher. But if we don't see that good news or hear any good news that come out, in fact, if the news gets worse, then you could probably see a further pullback in the markets. And so there's too much uncertainty right now of how things could shake out in Europe to make that call.
All right. And again, our regular contributor, Greg Womack, president of Womack Investment Advisors, joining us from Edmond, Oklahoma. And I'm John Hanna for CDTV.net.